Which fund would have made you more money if you put $10,000 into it? SCHD or VIG? I've collected all of the data over the last 10 years for both and simulated this, and the results are very interesting. Both of these ETFs, or exchange traded funds, are very popular online, but it can be hard to compare them since SCHD is primarily focused on high paying dividends today, while VIG focuses on long-term dividend growth. To compare them, we'll look at a few key investing metrics, such as their past and current performance, dividends, price appreciation, and a side-by-side comparison to see exactly what would have happened if you invested $10,000 into each of them 10 years ago. Let's take a look at our first competitor, SCHD. This fund is owned by Charles Schwab Asset Management, and this is their Schwab US Dividend Equity ETF. Their objective is to track the Dow Jones US Dividend 100 Index as close as possible. They pay a rather large dividend and offer massive growth potential. They do this by tracking dividend-paying stocks. This makes SCHD an attractive option for investors that are looking to generate dividend income while still having that price appreciation. The fund even has a rather low management expense ratio of approximately 0.06%. Taking a look at their holdings, they focus on sectors such as financials, healthcare, and consumer staples. Since the fund is quite diversified, this makes it an appealing option for stability, especially during times of market volatility. Now let's look at our competitor, VIG. This fund is owned by Vanguard, and this is their Dividend Appreciation ETF. Their objectives include tracking the performance of the S&P US Dividend Growers Index. They have a low starting dividend, but offer significant long-term dividend growth potential. They do this by tracking US companies that have had consistent increases to dividends for at least 10 consecutive years. This makes VIG an attractive option for dividend investors seeking lower volatility and stable dividend growth. Similar to SCHD, they also have a competitive management expense ratio of approximately 0.06%. Taking a look at their holdings, they have a large amount of this fund in information technology, financials, and healthcare. Now that we have an understanding for each fund's objectives and intents, I've gone through and collected all of the raw data for each. So everything from the price of the fund on the day that they were introduced to the market, and including the dividends paid up until December 2024. So for SCHD, this was brought onto the market during October 2011. They recently conducted a 3-to-1 stock split, so quick note, all prices and dividends have been adjusted accordingly. With that, when SCHD was brought onto the market, their initial price was just $8.44. So for a $10,000 investment, you would receive almost 1,200 shares at the time. By the end of their first year on the market, they declared their first ever dividend at just 4 cents per share, which could have returned you $48.10 at the time based on these 1,200 shares. Based on this data, it seems like a fairly decent investment already. But if we look ahead to Q4 of year 1, the stock is now trading at $9.45 per share, while the dividend has increased to 8 cents per share. So you could have collected $372 in dividends so far, and if you include your stock appreciation, the total return could have been $1,575. This represents a 15.7% total return so far, and this is just the beginning for SCHD. Fast forward to the end of year 5, you could have received a total of $2,254 in dividends, and if you include the price appreciation, this could have brought your total return up to $10,145. This would mean that your total return is now 101.5% of your initial investment. The new price of SCHD is even up to $14.68, and the dividend is now up to 13 cents. We can't forget about how many shares this would now be. We started with almost 1,200, and now we are up to 1,360 by reinvesting all dividends received to date. Let's take a look at how VIG would have performed in this same time frame. Since SCHD was brought onto the market in October 2011, we need to make sure we are buying into VIG at the same price in these time frames. At this time, they were worth only $52.84, which could have returned 189 shares for a $10,000 investment. After 1 year of holding VIG, you would have received some dividends, with the most recent one being 49 cents per share, bringing your total dividends to date up to $333. Now looking at your total return, this could have been $1,648, representing a 16.48% increase. By year 5, you could have received $1,648 $1,679 in dividends, and your total return would be up to $8,241. This represents an 82% gain from that initial $10,000 investment. We can begin to see that things are pretty close at the halfway point here, just 5 years in. Let's look at a few more data points here as we close in on that 10-year time interval that we first set out to review. By year 7 of SCHD, we could have seen a total return of $11,830, with $3,452 coming directly from those dividend payments over the years. Comparing this to VIG, we would have seen a total return of $10,881, with $2,481 coming directly from those dividend payments. Now, things are still very close, but by year 10, SCHD could have made you a total return of $25,386 compared to VIG returning $24,969. So we do have enough historical data to take this to 13 years. So if we want to look at it from this time scale, starting with SCHD, the total dividends received would be $10,138 and the total return would be $33,712. This represents a 337% return overall. And if we look at VIG, the total dividends would be $6,054 and the total return would be $33,844. So both of these results are very close on both the 10 and 13 year timescales. Now let's use a few graphs here just to get a visual of these performances as well as a summary of our findings. We can see that SCHD is in the blue and VIG is in the red. The first graph here displays the total return performance between the two. As you can see, they both have steady increases since 2011, and the overall performance is relatively close throughout the years. But this graph really puts things into perspective. If we compare only the dividends received throughout the years, SCHD has had a better return than VIG. But as we saw earlier, their total return, which includes both dividends and price appreciation, is very close. So on our 10-year time frame, we can see that SCHD would have returned more than VIG, but on our 13-year time frame, VIG would have returned slightly more than SCHD. Let me know what you think of each ETF in the comments below, and if you made it this far in the video, please like and subscribe for more financial education related content. Thanks for watching.